Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 4th of August. Starting off with IDE Group, where not only have we got reports of private equity swirling around the company, but there's also been a gap higher through the 50-day moving average at 25 pence. While we're above that, looking for a journey towards the 200-day line at the top of the March trend channel, 35 pence over the next few weeks. Obviously, maybe the fundamentals will kick in with a juicy offer for the group. Next up is Destiny's Child, Destiny Pharma. Here we've got a situation where we've broken that falling triangle, or falling wedge, I suppose, at the 50-day and the 200-day moving averages, the latter at 38 pence. While we're above 38 pence, looking for a journey towards that December resistance line projection as high as 67 pence over the next 4 to 6 weeks. Genedrive has given its fans a bit of a rodeo ride over the last few weeks. We went from £1 down to 60p, then back up to the pound, and then back below the 80 pence level, and maybe down to 70 pence actually. But the current situation is that we've broken that line of resistance, a major one there from May, around the 80 pence level, maybe you could call it 78 as a stop loss level. And while we're above 78 pence, looking for a retest yet again of the 100 plus pence area up to the 50-day line initially, I think could be achievable. IDE is next, and the reason for the inclusion here is the way that even though we've got a very illiquid looking chart, dots of daily candles, we've had quite a decent bounce off this shallow line of uptrend line from March, and while we're above the 2.1 pence zone where the line is, looking for at least the 200-day moving average at 3.11 pence. A weekly close above that 200-day line could eventually take the shares on a 2 to 3 month view up to the top of the rising October trend channel at 7 pence. Rather easier situation comes in the form of Immotion. Here we've got bear trap gap reversal for the shares, and at least while they hold above the 50-day moving average at 2.42 pence, we're looking for higher prices. If you're cautious on the shares, maybe wait for an end of day close above July resistance at 3 pence intraday. But it looks as though, at least while we're above the 50-day line, we could hit on a 2 to 3 month time frame the top of the broadening triangle from March at 6 pence plus. Rather sort of obscure stock coming up next, Marichal Capital. Here the interest provided by the golden crosses, well, in fact all the near-term moving averages are rising. We had a golden cross between the 50 and 200-day moving average at the beginning of June, so we've had that signal there for quite a while, and the shares now with this the near-term moving averages golden crossing as well, looking quite healthy, even though it's looking as a rather slow situation. But could see a move towards the top of that rising trend channel that I've just drawn from September up to 1.8 pence, and that target valid while we hold above the initial July resistance at a penny, if you can afford the money management, and also presumably also the spread on the shares as well. Stock which is currently living up to its name in terms of the price action is Oxford Biodynamics. We have got this very encouraging U-shaped bull flag. That's what I call it anyway. It was a V-shaped bull flag. I had a little hesitation at the 200-day moving average at 86 pence, but an end-of-day close above that, and the shares could easily hit the top of the rising trend channel from March up to 105, and in fact we're looking for hopefully much more retest of November resistance at £1.50 if we can consolidate well through the 90 pence level, which is post-April resistance. Star of the day, which is a stock which I covered at the beginning of July, is Redx Farmer. Here we've got a situation, if I can get the right EPIC code typed in. We've got a situation where the shares gapped up very strongly on great news for the company. Probably the easiest thing to do now is to wait for, to assume that the old initial July resistance at 70 pence will come in as new support. If it does, we will go on to potential £1.10 target, which is a line of resistance from May. You can see that the original 90 pence target drawn from the beginning of last month has already briefly been hit, but above 70, possibility of up to £1.10 for Redx Farmer. Another relatively obscure stock on a rather thin day is Smartspace rather. Here we broke that neckline resistance around 42 pence late last month, and while we're above that, looking for a top of January trend channel target as high as 90 pence. I suppose you could squeeze the stop loss up to 50 pence, as that was resistance on the way down rather back in January, but at least we have the setup for a potential move towards 90 pence once the RSI, currently at 97, cools off a bit. Stock which I've covered a few times before and is worth an update at the moment is Tristar, looking quite healthy. The shares finding support now above the 50-day moving average at 22.9 pence, and while we're above that, looking for the big target here up to 60 pence at the top of that rising trend channel from January. Looks like a decent setup for the shares, especially as we're back above the 200-day moving average and have found support above it too, both the 50 and 200-day lines. If you're cautious on the shares, maybe wait for an end-of-day close above the 20-day moving average, just under 27 pence, before getting on the bullish bandwagon. Stock which is notable and has been in recent weeks is Trafalgar. Here we've got a situation where we've had that very strong gap up through the 50 and through the 200-day moving average at 0.12. Higher lows since then after the gap, higher above 0.15 pence, and while we hold above 0.15, looking for the top of a broadening triangle from back in July last year at 0.35 pence plus. The last stock of the day is UK Oil and Gas, which try not to look at too much because it has a tendency to disappoint, but I suppose at least the shares did deliver on that falling wedge break around 0.18, 0.19 last week, and briefly touched headed towards 0.3. Key today will be whether we can have an end of day close, another one above the 50-day moving average, currently around the 0.21 level. So I think that would be key. Otherwise, it's the same old one-day spike and then back up down to support again. So 0.21 the key level on UKOG at the moment. That's it for me today. More updates tomorrow.